In this video, I'm going to be explaining my trading strategy. It's been requested quite a few times, and I'm going to not yap too much. I want to get right into it. I'm going to explain all the concepts first, and then I'm going to show an example from today because today was a textbook example of what my strategy is and what my model looks like in the market. So I use four key concepts. The first and most important by far is draw on liquidity. Without draw on liquidity, no trade you take will have any narrative. This isn't unique to my strategy. Every strategy you take needs to have narrative, needs to have a story behind it. No matter what entry model you use, whether it's ICT or not, if you don't have an idea for where the market is going to go long term or on the higher time frame or even just on the day, then you have no story behind the trade you're taking and you're just going to end up pattern trading and chasing your tail in the market. So, draw on liquidity, definitely number one. I come into the day, I find a key level where I'm like, okay, I definitely want the market to go to this high or low. And if I can't define a level like that with confidence, that's it. I'm done. I don't even look at the charts anymore until there's a high or low that I'm like, yeah, this is definitely where we're going to go. And then that's where the rest of the strategy falls into place. So, two and three, they go hand in hand as manipulation. So after I find my drawn liquidity, I look for a liquidity sweep in the opposing direction along with a run into a higher time frame PD array, both as a form of manipulation. Meaning, here in this little model I have drawn out, I have a buy side liquidity level up here. I want to see liquidity sweeps, right, that we get here and all these runs lower happening and also taking out old lows from further to the left that maybe I haven't drawn out. Those paired with us hitting already unmitigated PD arrays, right? This being discounted fair value gaps, order blocks, rejection blocks, breaker blocks, whatever it may be. We need to go and fill in more orders and collect more liquidity to have that move up. And then the confirmation out of the liquidity sweep and the higher time frame PD array to confirm that we are done manipulating and ready to project toward the draw on liquidity is just going to be in the form of an inversion fair value gap. That part's pretty simple. I'll show in the example. And then step number five is optional. You can see I have optional here, is an SMT. An SMT is just what takes a setup from being an A setup to an A plus setup. I don't demand it, but if I see it, perfect. It just adds conviction to my trade. So let's go over my trade from today. It was a textbook example of what my strategy looks like. So coming into the day, what did I say the most step number one is? We can refer to these steps as we go about this. So I'll drag them here beside us. So step number one is draw on liquidity. So let's go to the last 15-minute candle before the market opened. 9:15. Okay, so this is what it looks like right before the market opens. What do we see? Well, today draw on liquidity comes pretty easy because we are at all-time highs. This is the highest we've ever been. We have no reason to continue to push lower. That is one checkbox towards being bullish on the day, right? Having a bullish draw on liquidity. Number two, daily profile. If we look at the London session, we look where the midnight session opened, and then the London session pulled into this fair value gap and then expanded higher. This means that the move higher was sponsored by this fair value gap, and we don't need to reverse the entire move. So that means that this London low to this London or pre-market high is now a range that we're playing inside of. So now we're confirmed bullish. This high here is definitely my draw on liquidity. Looking at this high here. So now what do we look for? A run into a higher time frame PD array paired with a liquidity sweep. So I didn't really say this in the checklist, but along with a liquidity sweep and a higher time frame PD array, I like to see a run into the discounted OTE ranges, that being just equilibrium of the range and the OTE levels here. So I come into the day and I look at this chart and I say, okay, I'm bullish to this high, and I just want to see one more liquidity sweep. We're already inside of this higher time frame PD array. We've already hit OTE. I want to see another liquidity sweep here of this low, maybe an SMT paired with it, and then I can find an inversion to take long. So that's what I'm looking for coming into the market open. And that's not exactly what we get. The market runs up. Well, that's what we get to start. As you can see, we get this SMT at this low here. And then there was a 30-second inversion that happened here. And I actually did take that trade, which got stopped at break even, but that wasn't my trade on the day. So we get another run lower, we hit the minute opening price, and we continue to displace lower. Now at this point, it's not looking like this range is going to hold at all, but then this is where the fifth concept comes in. If we zoom out a little on ES we can see that we have taken the London low, right? ES has already gone way below this low, leaving an SMT with NQ, right? A bullish SMT. NQ does not touch that London low, and NQ actually ends up holding this discounted BPR that we had not mitigated up until this point. So we run into there, also bringing your attention to how ES ran even this sell side liquidity level. So ES takes two lows, taps into this new leg of fair value gaps. So we have a good amount of divergence here at a key level being the original change in state of delivery, right? Look at this order block that was made here. The most discounted fair value gap that there is, and now in a time-based discount, this midnight opening price. So right now, this is looking pretty good to go long. So what's the last step that I need? That would be an inversion fair value gap. When I see an inversion fair value gap, I'm talking about the highest time frame inversion, the inversion of the highest time frame gap in the current leg that we are in. So this leg that we're in right now, this high to low, where is the range I just marked out? Where's the highest time frame fair value gap that we can find, right? So we'll start on the smallest time frame. Okay, well, we have 1 minute gaps above us here and here. We have a 2 minute gap above us. We have a 3 minute gap above us. We have a 4 minute gap above us. And we have a 5 minute gap above us. Now, I don't go any higher than the 5 minute gap when it comes to these low time frame entries. I don't care if there's a 6 or 7 minute. 5 is the highest I'll go. And I don't concern myself with anything higher. That's just how I do it. I've never even back tested to look for the 6 or 7 minute. I don't worry about it, and it doesn't seem to have a significant effect on my strategy. So now I'm waiting for this fair value gap to get inverted. And my entry would look a little something like this. So now we're just waiting on this fair value gap. We have everything we need. We have our draw on liquidity, which is up here. This is our external draw. We have gotten the liquidity sweep here, here, and run of lows in this leg. We've hit a higher time frame PDRA, right? We're heavily rejecting these two discounted gaps. We've hit this order block. We've redelivered from this fair value gap. And then ES has taken a lot of liquidity, providing us with an SMT. So we have everything we need. This fair value gap, this inversion fair value gap, is the last confirmation that we need to get in a long position. So we wait. This is why it's important to wait for the highest time frame inversion fair value gap, because if you had waited for the 1, 2, 3, or 4, they would have inverted, but the 5 minute didn't. And luckily today, it still went up and inverted afterwards. But on a day where it doesn't, that's an easy recipe to get your position screwed over because you just didn't want to wait for the highest time frame fair value gap to get inverted. So we have to wait until this 5 minute fair value gap gets inverted. And my entry was actually when I didn't wait for the 5 minute fair value gap to get inverted all the way. I know I just said always wait for the highest time frame fair value gap to get inverted, but I've traded this strategy hundreds and hundreds of times. So it's a screen time thing. It's a market intuition thing. When I looked at the lower time frame, the 30-second time frame, I don't have it available here. I have to go on my AlphaTix account. That's where I saw it. Once we came back into this fair value gap here and pushed higher and then got a 30-second inversion that was here, That's where I entered on the closure of this candle. There was only 1 minute left until the 5 minute close at that point, but that was all the confirmation I needed. Until you develop this market intuition, please just stick to the basics and just wait for the 5 minute gap to get inverted. So there's my entry, have my stop at this low, and my first and final TP was at this high here. Yes, this is my overall draw on liquidity, but I don't need a home run play every single day. I'm totally fine with a base hit like this. This is still 1 point, or actually, maybe my stop was wider. It wasn't that good risk to reward. Yeah, 1.5. So this is still good enough risk to reward for me, and this model will hit often enough that I don't need to hold for more risk to reward. This model has a high enough win rate where I can just take off the positions at lower demand draws on liquidity and still perform very well. So there's my entry, stop loss at the low, and that's it. I let it ride out. I enter there, and my plan is to go break even when either NQ or ES takes this high, because first of all, if NQ were to take this high, that's not somewhere I want to see us slow down and reverse. And if ES were to take that high, that's not somewhere where I want to see an SMT slow us down. So either one taking this high, I'm going break even. Wait for that high gets taken. My stop loss is now at break even, risk free, risk is off for this position, and then we get continuation all the way to take profit. That's it. You can see here we also had a data high up here. So, but since we're at all-time highs, of course, market continued to run, but that's not really like my interest to get in that play. I'm more than happy with the position that I took, and given the same opportunity to do it again, I would play it the exact same way. There's no need for me to hold longer with the win rate that this model has. So that's the entirety of my strategy. Hope you guys understood. It is not very complicated, and it uses relatively simple concepts. If you have any questions, leave them anywhere. I'll see them. Discord, YouTube, TikTok, and I'll get back to all of them, answer as many as I can. And yeah, hopefully you guys learned a thing or two and can improve your trading with something that you learned that you can apply to your trading. So, yep, peace out.